Welcome back. You're watching Market Fatafat on ET. Now let's move on and talk about the next stock that's in focus. We have Varun Beverages. Varun Beverages actually posted its Q2 calendar year 24 numbers. When you're looking at it, numbers are not bad, but the company also announced a stock split as well as a dividend announcement that came in from the company. Now overall in terms of the earnings, first let's look at that, right, where that came in at. So revenue saw a growth of around 29%. We saw profits growing by 26%. Margins also seeing an improvement, 27.2% versus 26.5%. So a 60 basis point improvement in terms of margins. Overall, obviously, summer season is something that is overall aiding the company's growth, and and the profits of the company also were driven by volume growth and improved margins, is what Varun Beverages highlighted. And other than that, in terms of the stock split announcement also that came in, let me just pull that up. So they've said that the stock split is going to be in the ratio of 2:5 that we're watching out for. So mainly checking at the ratio is something that we should be watching out for now. But all in all, a decent number that came in from this company. Stock split is something that we're watching out for. 2:5 is the ratio. As of now, stock down almost 5.7% in trade.
All right, another counter that is above in trade is RVNL, which is almost a regular feature on a show. But the thing is that the stock is up 3%. It is on the back of the fact that it has emerged as the lowest bidder for development and distribution infrastructure at the central zone of Himachal Pradesh by the Himachal Pradesh State Electricity Board. Now, this order is worth 739 crores and the project is expected to be completed within 24 months. And on the back of that, we can see it has currently cooled off those gains, morning gains, but it is currently trading with gains of 1.3% RVNL.
Okay, that is RVNL for you. But let's move on and bring on board our technical analyst now. We do have Chandan Taparia joining in with us. Chandan, good afternoon. And the first stock that you've picked out for us today is BPCL. Surely this is buzzing in trade today because of the crude volatility and the crude decline that we've seen. But BPCL on the charts, what's the word?
Yeah, thanks for having me. Yes, most of the oil marketing companies are doing well as crude sentiment is supporting the counter. We have seen a decent run-up in last 4-5 trading session, and the stock has been making a high top, high bottom. Looking at the derivatives front, it has added open interest near to 7%, and the data setup suggests the positive momentum could continue. So one can hold the long position or can continue with support of 340. We are expecting the run-up to extend towards 375 to 380 in the counter.
All right, moving on. Snehi, Granules, an earnings candidate you have picked out for us. Tell us what does the earnings snapshot look like?
Well, absolutely. So these numbers came out just a few hours ago in today's trade, and let's take a look at the numbers. Prima facie, these numbers look very good, and the revenue has come in at 1,180 crores versus 986 crores, which is up almost 20% year on year. Net profit also has come in at 135 crores versus 48. A 180% uptick coming in, so multifold is where the net profit is at. EBITDA has come in at 259 crore versus 137, up almost 90% on that front as well. EBITDA margin also very smart expansion coming on this front, 22% as of now versus almost 14% last year, which is up almost 800 bips on a year-on-year basis. Now we also have some management commentary coming in. They've said that the revenue share from the NA has increased to 74% in Q1 this year versus 61% year on year. There's also a decline in the para API and the PFI sales volume and some price erosion being seen, but they're back to their planned trajectory after a few setbacks last year, and they're promising a brighter future driven by their formulations, offerings and a new product pipeline as well. So very good numbers, and upon that positive commentary coming in, and that is what is leading to the stock reacting nicely today. 3.3% higher is where the stock is at.
All right, another earnings candidate, Maharashtra Seamless, posted its quarter numbers, and weak set of results is what is putting the pressure on the stock. In fact, the revenue and EBITDA, the margins have seen a massive decline. Revenues are down 6% on a year-on-year basis, and the margins are down 913 basis points on a year-on-year basis. The net profit also declined 37% to 128 crores versus 206 crores on a year-on-year basis, and the EBITDA also saw a downtick of almost 50% on a year-on-year basis to 124 crores versus 243 crores in the previous year. So a weak set of results coming in from Maharashtra Seamless. On the back of that, we see the stock coming under pressure. Right now trading with cuts of 0.4%.
Okay, surely keeping an eye out on that. But Chandan, the next stock that you picked out is another OMC, HPCL. So similar to BPCL, or what's the trajectory for HPCL now?
Yes, exactly. Most of the oil marketing companies are doing well. We have seen a decent run up in BPCL, and I believe the HPCL and IOC both are likely to see the positive stance. Looking at the derivatives data, the stock has seen the open interest addition of around 8% with surge in price, which clearly indicates that longs are being added. It has seen a jump in the trading volume, and I believe that rising delivery volume also indicates the positive stance. We have seen a coal unwinding in 400 strike that is also supporting the positive stance. So I believe one can hold with support of 388 and expecting HPCL to extend the rally towards 420, 432 levels.
Okay, surely keeping an eye out on that one. But let's move on to the next one. And saying IT cementation, this one is in focus on the back of some order wins.
Well, absolutely. So ITD cementation also doing pretty well in today's trading session. The stock rallied as much as 5.67% to hit an intraday high of 539.6 rupees. As of now, slipped slightly below that level at 527 is where the stock is at right now. The uptick in the share price came after the company announced that it has secured an order worth 1,237 crore rupees. And under the order details, ITD cementation will be responsible for constructing a residential colony in New Delhi, which is the phase 2 of this project. So on the back of this order win, stock up almost 3.5% as we speak.
Okay, let's move on to the next one, and we have MCX that's in focus on the back of a brokerage note that's come from UBS, where they're maintaining a buy and hike to the target price to 5,000 from previous target price of 4,300 rupees per share. What they're saying is that they are expecting a strong Q1 and Q2 which is expected to be even stronger than Q1, and the continued volume growth, profitability which was impacted by one-offs. Now obviously that is behind them. They're expecting a healthy uptick in terms of options average daily volumes, and a marginal decline in futures in July 2024 is what one could watch out for. But they've hiked the target price by 700 rupees to 5,000 rupees from previous 4,300. MCX in focus was trading almost higher by almost 1%, but now just trading with gains of 0.25% in trade.
Alright, moving on to another earnings candidate, ACC Cement, that has posted its quarter numbers. In fact, let's look at the numbers. The numbers don't seem to be very good, but a good note coming in from the brokerages, and this is primarily on the back of the fact that these brokerages see strong growth on the back of FY25 capex push. But let's look at the results first. This saw a revenue decline of 5%. This is on standalone quarter-on-quarter basis. PAT also saw a downtick of 51% on a sequential basis. The margins were down 240 basis points, and the EBITDA also saw a decline of 19% on a quarter-on-quarter basis. But let's look at what the brokerages have to say. Morgan Stanley has issued an equal weight call on ACC Cement with a target price of 2,930 rupees. Also, we see Jefferies come out with a note maintaining a buy call on ACC with a target price of 3,045 rupees. Nomura, however, has issued a reduced rating on ACC, and the target price they have set is 2,200 rupees. So that's what the brokerages are saying about ACC Cement. But currently, it is declining in trade on the back of weak set of results coming in, with the trading with cuts of 0.6%.
Okay, surely keeping an eye on that one. But Dixon Tech, that's the one that's been buzzing in trade for a while now. And Chandan, what's the word on Dixon Tech? Do you think it will take a bit of a breather?
Yes, so we have seen a decent run-up in Nifty IT in last couple of weeks. But in last few days, we witnessed some profit booking and then again some recovery. It had corrected from 12,750 to 10,750 and now taken support at its 50-day mark and started to form higher highs, higher lows. Major trend is positive, and recent corrective move provides the fresh opportunity and the better risk reward ratio. So that is the reason that I'll go with Dixon. With support of 11,500, one can target towards 12,500 in Dixon Technology.
Okay, keep an eye on these levels over there for Dixon Tech. But let's move on and talk about Sasta Sundar Ventures. That's the one in focus. And this is also on the back of its Q1 numbers when you're looking at it. Now, when you're looking at it, the gains of the in Q1 saw a sharp jump up coming in. Overall, it was the shares also climbed up almost 8% intraday today. As of now, holding on to gains of 4.5%. Q1 consolidated profit shot up 24 times, which was mainly supported by the deferred tax gain that was there this time. Now, excluding that, also the profit saw a growth of almost 24%. All in all, Sasta Sundar Ventures managed to see a very good performance in Q1 that is keeping the stock abuzz today, holding on to gains of 4.5%.
Alright, Snehi, coming to you then. NTPC that had its analyst day. May tell us what were the key takeaways and what is powering the stock?
Well, absolutely. So, analyst day key takeaways, very good commentary coming in from the management, and this is what analysts have heard today. And remember, a few days ago, NTPC came out with its numbers, very strong set of numbers on that front as well. But let's take a look at what happened in this analyst meet today. Now, the management has said that they plan to undertake over 7 trillion rupees, which is roughly 7 lakh crore of capex by the end of FY32, and this is a statement that has done very well for the stock today on the street. They also intend to order out the 15 gigawatts over the next 2 fiscal years and install 60 gigawatts of capacity by 2032. A big surprise at the analyst meeting was the focus that the company put on their nuclear segment, and the draft red herring prospectus filing will likely take place in 2 months for their green arm. There's also substantial growth plans of THDC, that is the Tehri Hydro Development Corporation, and NEEPCO, which is the Northeastern Electric Power Corporation Limited. So on the back of very positive commentary coming in, especially on that capex front where they're planning to do 7 lakh crore by FY32, the stock is doing pretty well, up 3.4% as we speak.
Okay, let's move on and talk about the next stock, and Tata Motors. Chandan, this one is also buzzing in trade today, but what is the outlook that you have for Tata Motors going forward? What is the target price that we're keeping?
Yes, so we are positive on the Nifty Auto, and Nifty Auto Index has given a breakout after a consolidative move of last 30-35 days. And in line with the same, positive view is clearly visible in most of the auto name, including Tata Motors, Maruti, M&M. Tata Motors has been making high top, high bottom, and recently it has given a breakout on the daily and the weekly chart by holding well above 1050, 1060 zone. It has been making high rise, high lows, and now I believe with support of 1140, it can extend the rally towards 1225.
Alright, that is Tata Motors. But moving on, it is time now for yet another prominent voice from our CII collective post PM Modi's address on the road to Viksit Bharat by 2047. Let's go across and listen in to what the Apollo Tyres chairman Onkar Kanwar had to say.
Infrastructure drives the industry, and he has been rightly saying, why do we work together as industry? And we are totally committed to work with him to see how we can take it forward.
So what do you make of the capex push, the kind of comparisons that he was giving, that last time it was 2 lakh crore by the UPA government and this time it is double?
Well, the kind of effort they are doing, it's a big one, but still we have a long way to go. But he's given the message to say, you as an industry should work with me and put money more in the industry.
And also when we speak about capex, it is time for the private sector to also push it.
Because he's creating environment, so I think the private sector is going to come forward to put more money in the capex.
Okay, and more coming in from that front. Sumita also caught up with former President and CEO at Interglobe Aviation, Aditya Ghosh, on the sidelines of the CII post-budget meeting. Listen into what they had to say.
These policies kind of build up on what is already available. But I think what's very important is that the industry comes together. Second is, I think there are some recommendations that the CII has made. I'm the chair of the CII Skills Development and Employment Committee. So there are some recommendations we have made. For example, if there's a government contract being given out, do you give priority to a company which has skilled workforce? You know, do you in some other ways start incentivizing companies who are spending time and effort behind skills? But of course, you know, I also personally think that it is not just job creation, but it's also entrepreneurship. So both of them have to come together. That needs to be led at the bottom, at the beginning level with skills development, and at the top through support and higher research. When all of this kind of comes together is, I think, where we will be able to, the magic will happen, I think.
All right, time for another breather, but don't go anywhere. After the break, we will get you more stocks. Welcome back. You tune into Market Fatafat, where we are taking you through all the stocks that are buzzing in trade on the back of research or on the back of technicals. Snehi, Kalpataru projects is what you've picked out for us. Earnings candidate, I believe. Tell us, what are the numbers looking like?
Absolutely. So, revenue has come in at 4,587 crores versus 4,241 crores, which is up 8.2% year on year. Net profit has come in at 93 crores versus 115 crores, which is down 19% year on year. EBITDA also come in at 378 versus 382 crores. That is slightly down, just 1% lower year on year. But EBITDA margin has also come in at 8.2% versus 9%, which is down 77 bips on a year on year basis. So slightly weak week numbers coming in, but it's the net profit that has taken a big hit. It's almost 19% down on the year-on-year basis, and on the back of that, the stock is low 1.5% as we speak.
Okay, surely keeping an eye out on that one, but let's pull up Ratan India Enterprises. That's the stock buzzing away in trade today, and there's not an earnings candidate, but news flow coming in that Revolt Motors has secured an approval for EV subsidy. This is from the government of India. Look at the stock trading with gains of almost 5% as of now, and obviously as per this communication coming in earlier, Revolt Motors said that as a responsible corporate citizen, they had proactively paid back the past availed subsidies under FAME 2 subsidy regime, and with this, all the past related issues to FAME 2 subsidy, that has been fully resolved now. This surely comes out as a very significant step for the company, not only for Revolt Motors eligible for the current scenario in terms of that, but also for the ongoing EMPS 2024 subsidy, which is for the two-wheeler vehicle space. So that is positive, as well as the subsidies for FAME 3. That also turns out to be a positive, and that is why the stock is buzzing away in trade. Keeping an eye out on Ratan India Enterprises, 5% uptick as of now.
Alright, moving on to another counter. Dabur is what you picked out for us, Chandan. Tell us what are you seeing on the charts for Dabur. This one's not very far from its 52-week high. Tell us what are you seeing on the charts.
Yeah, so we have seen a muted movement in the counter in last 4-5 days. However, it tried to hit the high to 662, but has been consolidating from last 4-5 days. I believe buy on decline could continue. Margin of safety could be here. So if it declines towards 620, 625, one can grab the stock with support of 16, and then again it can head towards 660, 680 zone.
Only keeping an eye on those levels for Dabur India, but let's move on and see. We had New India Assurance that's buzzing in trade, and it's an ET Now news that we have coming in.
Well, absolutely, Vinny. So, ET Now exclusive news coming in today. Our colleague Anurag broke this earlier. And New India Assurance is all set to hike premiums by 10% on 9 health insurance products starting 1st November 2024. This move comes as a response to rising loss ratios and new IRDAI regulations. Other insurers are also planning similar hikes, and sources tell ET Now that the New India Assurance set to hike their premium on 9 products, and increase in the loss ratios is the reason for this upward revision. There is no hike in products like New India Mediclaim, New India Family Floater and Yuva Bharat Policy. So these 3 products will see no hike in their premium in them. And new regulations on reductions waiting period, moratorium period are also reasons for the hike that they've gone ahead and initiated. Now, New India Assurance market share in industry health insurance premium was 18% in Q1, and the IRDA new regulations on health insurance got effective from April FY25. So these are some of the few things to know when it comes to New India Assurance. But well, yes, exclusive ET Now story, hiking premium by 10% on 9 of its product offerings.
Alright, moving on. KEI Industries is in focus today. An earnings candidate, a decent set of results posted by KEI Industries. In fact, it was pretty much in line with what the street was expecting, but it gained 0.5% in the morning, but has now succumbed to its selling pressure. But let's look at the numbers then. We saw an uptick of 24% in the PAT on a year-on-year basis. Revenues also saw an uptick of 16% coming in at 1,060 crores versus 1,781 crores on a year-on-year basis. The margin also up 50 basis points, and EBITDA also saw an uptick of 22% coming in at 214 crores versus 176 crores in the previous year. So net in line set of numbers for KEI Industries, but currently the stock is trading with pressure and a cut of 0.6%.
Okay, surely keeping an eye on that one, but let's mark the flashes at the bottom of your screen, because we do have Force Motors that reported its numbers right now. Good performance coming in on the operational front, profits, revenues, all of them seeing a very sharp growth. EBITDA up by 38% on a year-on-year basis. Margins 13.2% versus 12.1%. Even the revenue and the profits of the company, that's seen an improvement. And look at the spike up that we're seeing in the stock, almost up 8% as of now. So clearly, the strong profit growth of around 70% is keeping the stock abuzz. But let's move on to the next stock on the technicals. And Chandan, Maruti Suzuki?
Yes, Maruti has been consolidating in a range. We have noticed that every small decline is being bought. However, it has multiple hurdle near 13,000 zone, and above that it may start the fresh leg of rally. So here we have to go for conditional trade. Let it hold beyond 13,000, then the rally could extend towards 13,700 to 14,000. Conditional trade and hold above 13,000. It will start the next leg of rally in line with the entire stock or sector to perform well.
All right. Moving on then, my colleague Sumita caught up with the SK Munjal, the chairman of Hero Enterprises. Let's listen in as he shares his views on the budget's focus on the job creation and the challenges for India going ahead. Let's go across and take a look.
I think this budget addresses some of these issues as to looking at how do you bring people the appropriate skills and then bring the skilled people into the industry. So currently we've got a mismatch. We have people, but we do not have the appropriately skilled people available for the suitable job. So they've announced a number of schemes, as you know, in this budget, including the internship in large corporates, which he referred to. And he also spoke about specific areas that can be pushed. So it is clear for a country like India to grow manufacturing, we will have to grow manufacturing where India already has a leadership position. Where we are lagging, we need to fix those, and those that have a multiplier effect on the economy and job creation. And those are clear sectors, automotive, real estate, hospitality, travel, health. Each of these has a massive multiplier in creating a very large number of jobs.
Going forward, what are the kind of challenges that you really see as far as India's economic growth is concerned, and how is India placed to address them?
Well, the more serious challenges actually are external right now, because the world is quite turbulent and unsettled, whether it is the law and order situation, whether it's a situation regarding oil, whether it's a situation regarding sustainability or energy. So we are facing a world where inflation has kind of caught hold across the globe. Fortunately, the US economy started showing some uptick in its growth in recent numbers. Internally, one of our challenges, what we were talking about just now, is ensuring that there are sufficient economic opportunities, sustainable economic opportunities, and the appropriate skills for people to get involved in those opportunities.
And with that, it's a wrap on this edition of Market Fatafat on ET Now. Thanks so much for tuning in.